China's imports of gold exceeded 127 metric tons in April, the highest in nearly a year, and up 73% month over month. This came after Beijing allocated fresh quotas to commercial banks last month. Meanwhile, purchase limits have tightened on Costco gold bars.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Gold Fix Market Rundown. I'm joined with a little company here, so I'm giving some back scratches. There's the front page. We'll discuss that in a second. 10-year yield. Let's start with the market. 10-year yields are offered unchanged. The dollar is 99.71, up 15. The S&P 500 is 59.27, down, unchanged offered. VIX is 19 and change. Gold 33.08, up, was up about 20, up about 8 now, backing off. Not healthy, short term. Silver 33.19, down 6 and change, down 7. Copper is 470, 471, up almost a penny. WTI 61.91, up 47. Natural gas is up 3 cents. Bitcoin unchanged. PGMs mixed. Grains mixed, with wheat up a little bit more than everything else. Okay, there's the front page. BRICS 2025 de-dollarization endgame. BRICS 2025, a lot of bricks, right? Okay, well, we're getting ahead of the curve. Gold is criminally underowned. We're going to talk about that. Don't get shaken out is our tentative title, and we'll get into that. That's based on our comment on the market structure. Okay, so don't get shaken out. We're entering a time frame where the market will go sideways or lower. Okay, sure, it can go up, but I want you to think it's going to go sideways or lower. And during that time, well, we'll get into it right now. First of all, we start with UBS. UBS's gold house view. China's imports of gold exceeded 127 metric tons in April, the highest in nearly a year, and up 73% month over month. That's higher than Goldman Sachs's anticipated rate of gold going up. And remember, they're saying gold's going to 4,000, and China is buying even more than they thought, and they're the most bullish of the group. This came after Beijing allocated fresh quotas to commercial banks last month, meaning commercial banks are already told how much they could buy, and the central bank said, well, we're going to buy ours anyway. Meanwhile, purchase limits have tightened on Costco gold bars. Quick hat tip to John Rubino for his Substack post, pointed that out. So thanks, John. Gold is criminally underowned. This is a post we just put out. While gold may consolidate after recent gains, any periods of price setbacks should be used to build exposure. This is UBS talking, not Costco, just so you know. Who knows? To manage political risks, we prefer a mid-single-digit allocation to gold alongside alternatives like hedge funds and capital preservation categories on equities. UBS is conservative, 5 to 10, 5 to 9. Okay, but that's the allocation. That's not the trading part. Now we're bringing this up in context of the Costco thing because gold is criminally underowned. All right, take a look at those charts. I'll pull them up for a second. All right, implied allocations to gold are nowhere. Right, implied allocations to gold miners are less than nowhere. They're essentially negative. If you want to draw a trend line. Okay, so, that's nothing has changed except in our minds, because it's moved so much. All right, so comment, sideways is bearish has been gold's history as less liquid owners are forced to sell in times of monetary duress. We may be entering that for some, depending on how your net worth is or how your liquidity is. Simultaneously, with the Fed now on pause of rate cuts, the ETF buying in the West has dropped off. I will spell check my work in a little bit. Hopefully you're not here for the production value. Now, why am I bringing that up in context of this? Because throughout my career, after a run-up, there's sideways. and sideways uh, resolves bearishly in gold because too much hot money or people that don't think they're hot money but are trading leveraged even though they don't think they're trading leveraged do so and they end up having to sell. It's the thing you sell. You're not going to sell your car. You're going to sell your gold. You're not going to sell, the things that you need to support your family day to day will outweigh the things that you're looking for down the road. Invariably, our vision gets shorter term when we're under a crisis. Okay. That behavior is a tax on you if you're thinking about selling, meaning the market sideways behavior is a tax on you. It's a patient game. It's the Chinese water torture. Okay. The funny thing is, China's doing it to us now. It's not China doing it. All right. If the market goes sideways to lower and Costco is restricting ownership, the market is being throttled slowly, not intentionally. It's not evil, or maybe it is evil, but people are being told to slow down. It's like a 10-day waiting period for a gun. Calm down. Stop buying physical gold. Okay? Calm down. Stop buying futures. That's what's going on in the COMEX. Calm down. Stop buying ETFs. Stop buying GLD because this is better. This is better for you. But what are they doing? The people that are advising you to slow down, the WEF, the WGC, the people that influence those people are buying. China's purchases month over month are up 70%. They're not stopping buying. Okay? Now, am I telling you to go out and buy? No, but I want you to understand that they're buying this gold while their policies globally are deflationary. Here's my point. In the East, China has now just begun a trade counterpunch to the US and to Europe. It hurts Europe the most. That could have nasty deflationary consequences. They have just started, they raised tariffs. They've done something that restricts, they've had import duties on America. I'm sorry, I got it backwards. They invertedly did that. China just dropped their car prices for export by 35%. That's a trade war. That's like China saying, we're going to sell our cars in your market. And that's going to put the local businesses out. So Europe, I think, gets hurt the most by this. We will as well. But Europe actually buys China cars. So they're going to have to stop buying China cars to preserve their businesses. So, but the point about gold is while China's doing this, they're buying gold. So they're telling you our policies are deflationary. Screw it, we're buying gold anyway. Do what they're doing if your wallet can afford it. Make sure you're in a position where you can afford it. So again, remember the smarter, bigger money, PBOC, the Fed, you don't think the US is buying gold, is buying more than it always has. Don't get shaken out if you can help it. Buy when you can, not when you have to, is something that I say frequently, meaning always prepare for the emergency. But right now, if you buy it, make sure you own it. Do not rent it. That is more important in this environment right now. If the market goes up above 33.50, well, then we can have another conversation. But until then, gold is criminally underowned. No one is selling it that is buying it. The only people selling it are speculators renting it. That's it. Coming soon this week, well, the uranium piece was out. The part 2 just went out, and part 3 is coming tomorrow. The China insurers mandate. I can tell you what that is right now. It's not a cap. It's a mandate. They have to buy it. They have to buy it probably before July. All right. So anyway, we have, and plus we have plenty more. And let's show you what else we have. This morning we just sent this out. I don't think we emailed it yet, but founders discussion, buyers, sellers, and bankers. If you are looking for an academic piece on how markets actually work, who's buying, who's selling, market structure, with gold as the jumping off point, why does this happen? Why does that happen? That's for you. That's probably an academic masterclass type of piece that I've done. I've done good ones and I've done bad ones. That's a good one. And it describes how the market works, why the market works, and how it will continue to work in every market, not just gold. Part two, uranium supply and demand. I just told you about that. Founders get 2 and 3 at the same time, et cetera, et cetera, et cetera. Data on deck. Minneapolis Fed President, rocket scientist Neil Kashkari spoke in Tokyo today. I'm sure he asked how the unagi was. 2 o'clock minutes of the Fed's FOMC meeting are up. Let's go back to the markets for a quick look. Oh, and that's Sable Offshore. That's a drilling company in that founders conversation that I mentioned. We had Ben Kelleran, nice guy, good analyst, young guy, knows his industry, and he spoke with us right before Sable kind of exploded there. And some of the founders have bought some. And we had him back to get an update. So listen to that if you want to learn more. Here we go. I'll just pull it up and give you an idea. There is no real news. Okay, there it is. We're in the middle of the middle of the middle. That's it. Okay, have a great day. I'm Vince.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.